Good evening, everyone. Good evening, everyone. This is Amanda Arnold with Credit Union of Georgia. I am the Vice President of Marketing and Business Development, and I am going to be your moderator today for our webinar on the Home Buying Process 101. So I'm just going to go over a few housekeeping things before we get started. If everyone can just keep their line muted throughout the call, there is a chat button in the top right-hand corner of your screen. And if you have any questions throughout the presentation, just type your questions in there, and we will try and answer them as the presenter presents. But any questions that are left at the end, we will definitely answer all questions at the end of the presentation. And then we will send a email out to all participants, everyone that registered for the webinar today, regardless of if they log in to attend or not, and we will send out the presentation via email as well as a recording, so y'all can take notes, but also we will send this out, all the recording out as well, so that you'll have it all at your disposal for the future. So first thing, I'm just going to kind of go over the agenda for tonight. Okay, so we're going to do introductions of our panel of experts. Then we're going to cover how much home you can afford, transition into the credit requirements, the importance of finding the right realtor, then going into the home buying process, home appraisal, as followed by home inspection, and then the closing attorney responsibilities, and then just some good house buying tips. And then at the end, we will do questions and answers, but again, we'll do this throughout the process as well. So I would first like to introduce our panel of experts for tonight. So we have a mortgage originator here with us. That is Joe Minna. He actually works here at Credit Union of Georgia. His office is right next to my office. So he is here on site at the Credit Union. We have a realtor with us today. Her name is Rebecca Cooper. She is with Cooper Southern Homes with Atlanta Communities. We have a home appraiser with us tonight, and that is Alan Rainwater with Alan Rainwater Appraisals. And we have a home inspector, which is Timothy Reed. Tim Reed, he is with Lunds Pro Home Inspections. And then we also have a closing attorney with us, and that is Willie Phelan with Phelan, Sherman and Phelan. So you will hear from all of those panelists tonight, but we will get started, and I'm going to turn it over to Joe Minna with Credit Union of Georgia.
Thanks, Amanda. The first couple of things I'd like to go over is how much home can I afford? That's probably one of the main questions that I get. And I think it's a simple calculation to figure out how much of a house you want to buy. And what I do is I kind of back into a mortgage payment. And to get there, what I do is I ask for your gross monthly income, and that's before Uncle Sam takes half. And then I look at your pay history and what your payments are. Payments would be any car loan payments, student loan payments, or minimum credit card payments. I don't look at your light bill, gas bill, rent bill, things like that. I don't look at that. So once I have your gross monthly income, and this is a math calculation here, once I have your gross monthly income, I take 40% of that number. So if it's two people applying, we look at obviously both incomes. Let's just take 40% of that. And then that number, I then subtract out what your monthly payments are, the credit card payments, the student loan payments, the car payments. And then whatever that number is, that's how much of a mortgage payment you can qualify for. Now, 9 times out of 10, because the interest rates are so low right now, you'll qualify for more of a house than what you want. So I get that all the time. Once I go through the calculation, I remember say, I don't want to buy a house that expensive, and I say that's fine. So they're well qualified. So again, we look at all of your income and then all of your monthly payments, and that I can do that over the phone with any of our members. If you need a pre-qualification letter, which I know Rebecca Cooper, our realtor online, who will be on a little bit, she always likes to have a commitment letter from the credit union before she drives you around on Saturday afternoon and shows you houses. So it's nice to have an approval letter before you go looking at houses. And again, it's done very quickly over the phone and shouldn't take more than 10 minutes. If you have that information, just have it available. And like I say, we can do it relatively quick over the phone. The next part is the credit requirements. Credit requirements would be, we'd like to see you have at least 4 trade lines or four open accounts on your credit report. The worst thing you can do, and I know it's kind of crazy, but the worst thing you can do is pay off all your debt and not have any debt and not use credit, because as a lender, we look at how you handle your credit, and if you paid it all off, it's hard to see how you've been paying back your credit. So keep your credit. I always tell people, use your credit card, pay it back on a monthly basis. If you have a small car loan, if you're trying to establish credit, a secured Visa or MasterCard always helps out. That kind of gets you started, or a small car loan, something like that. But just something to get your credit started. The one thing that's hard to overcome is if you have credit scores below 620. That's the hard part. So I know in the state of Georgia, you're allowed to get your credit report for free one time a year. If there are any credit issues, go ahead and get a copy of your credit report, and you can look on there and say, hey, here's a Sears charge-off from 1988 or whatever it happens to be, and get that resolved. I had a member where they owed Macy's $4, and it was a recent collection. They paid it off, and the next month their score went up 110 points. So for a $4 charge-off, it made a huge difference. It means they could get a home versus not getting a home. So take a look at your credit before, if there's any issues, before we go out looking. Now, if you know your credit's perfect and there's no issues, then that's fine. I mean, we can also look on your account here at the credit union, and if you've had a car loan with us, or if you have a car loan or have a credit card or any kind of loan with us, we can look up and see how you've handled your credit with us, and also what your credit scores were when you got that loan. So that's easy enough to do as well. And then the next thing we want to look at is the type of loans we do. We offer conventional mortgages. Conventional loans, you could put as little as 3% down for first-time home buyers. And a first-time home buyer is someone who has not owned a house in 3 years. So only our federal government could come up with that as a definition of a first-time home buyer. So if you've owned a home more than 3 years ago, you can do a first-time home buyer product. And a lot of times, if it's a husband or a wife or boyfriend, girlfriend, if one of the borrowers has owned a home and the other one has not, then we're going to go with they have not owned a home. So that's another way to get in with as little as 3% down. In terms of credit scores, we're looking for credit scores to get a good interest rate. You want to be somewhere in the mid to high 600s. If you're in the 700s, then you've got nothing to worry about. We do pull what we call a tri-merge credit report. So that's Equifax, Experian, and TransUnion. We look at all three. We use the middle score. If there's 2 borrowers, we use the low middle score. So sometimes that gets tricky. And if there's 2 people applying and one person has a lower mid score than the other, we will look to take that person off the loan and still qualify if we can. So we will work with you to make sure we get you the best interest rate and the best terms. If it doesn't work, then we'll tell you up front. But we do like to go over that, and that's usually with a maybe a 10-minute phone call. It doesn't take very long. The next one would be if there's any derogatory credit. So that's why it's a good idea to get a copy of your credit report so we can look at any of those issues that may show up. If they do, let's get them addressed and get them taken care of. Typically, it takes at least 30 days for that to get reflected on the credit report. There are ways to do what they call a rapid rescore. There are ways to get your credit report updated quickly. It costs a little money to do it, but of course, Equifax, if you give them money, they'll do just about anything. But they will rescore your credit if we can get some issues resolved. A lot of times, it's just a lot of legwork, being on the phone, getting online, trying to talk to people, which is almost impossible at the credit bureaus. But if something shows up on your credit report, it is going to take some work to get it off. It is not impossible. You can do it. Length of credit history, I think we talked about it a little bit. I'd like to see at least 3 trade lines and have a 12-month history. So we're looking for history of credit because we're making an obligation for 30 years. So we'd like to go backwards, which is the only thing we can do, is look backwards and see how you've handled your credit. The terms that we offer on our conventional loans, you can put, like I said, as little as 3% down or as much as you want. We offer 30-year, 20-year, 15-year, 10-year. We offer all different types of terms, and that's something that we can talk about as well when we get you pre-qualified. Let's go to the mortgage process. So the mortgage process is when we do the application. That's online at the credit union website. There we go. So that's online at the credit union website. You can do the application. It comes to us electronically. We will contact you. You will get an immediate email once you click submit on the application, but we will contact you and go over what exactly we're doing. Once we have that and you have a house picked out, you're with Rebecca and she finds a house and gets it under contract, we then will ask you for your pay stubs, your W-2s, where the down payment money is coming from, and what we call process. We will process the paperwork. We will order the appraisal. Mark Floyd will talk to you about the appraisal process. We will order the title work from our closing attorney, which is Phelan and Sherman. We'll be talking a little bit later. And as we gather that information, we get it all together, and we do keep you involved as much as you want as we process your loan. And once we have all that information, we then submit everything to our underwriter, which he's local. He's just right down the street. So we send everything to our underwriter. They'll ask for page 3 of a bank statement or maybe another pay stub, or just recently, since the 2020 W-2s have come out, we request an updated W-2. So that's part of the underwriting process. Once we have the underwriting cleared, then we are approved. We are approved and ready to close. At that point, we set up a time with the closing attorney and the realtors, if there are any, and set up a closing. And then we fund your loan, and then we go from there. And once your loan is funded, so let's say, for instance, we just closed on your mortgage today, the 24th of February, your first payment won't be due until April 1st. So you skip the month of March, and then your first payment is April. That's really quick to show you what goes on behind the scenes, but I think the most important part of how your loan, I call it, goes down the conveyor belt. How it goes down the conveyor belt is the more accurate information we can get up front, the easier the process is. I get this a lot. Everyone says, oh, getting a mortgage is so difficult. Everyone has a hard time. It's not that bad. It's not that bad. If we can address things before you find the house, if there's any credit issues, if there's down payment issues, I have to find out where the money's coming from. There's a lot of little things that go along the way as we go down the conveyor belt. So the more information that you can provide to me, the less pitfalls we're going to have. So the worst thing that happens is we get through this. It's a first-time home buyer. We go through the whole process. We get the file underwritten, and then it comes to find out that you owned the property a year ago. That messes things up. So the more upfront we can be, because the way these loans are done now, because of the mortgage meltdown from 2008, I mean, we look under a lot of rocks just to see what's there. I mean, it's just a lot of stuff that gets done to make sure that we're making a good lending decision. But again, we will work with you throughout the process. If there's a reason why we can't get your loan done, we will tell you. Typically, we will tell you up front before we spend any money. So at this point where it says the application received, we do not collect any money until we pretty much go to closing. Okay, so we talked about how much of a house we can afford. I'm just going through my notes, the credit requirements. And again, if there are questions, I'd be more than happy to answer them towards the end. The 3 C's of lending, we talked about credit, and then capacity. That would be your income, your employment, and your savings. The one thing that I like to just highlight is your savings history. If we're putting 3% down or 5% or 10%, whatever you want to do, I've got to show that you've had that money for at least 2 months. So if you have the money and it's in your account, no problem. If a large deposit shows up 2 days ago, I have to find out where it came from. If it's from your 401k, that's great. I need what I call a paper trail to show my underwriter where the money came from. So if we see money moving around from account to account to account, it's fine, but I just need a paper trail. Preferably, if you could put your money here at the credit union, it makes my job a little easier because I can just print your statements. But if you move your money to an account, leave it there. Don't touch it. Okay? I did say that you can borrow against your 401k for the down payment. I didn't say withdraw money because then you get a tax penalty, but you can do a loan against your 401k for the down payment. That's perfectly fine. That debt or whatever the payment is on that 401k loan is not in your debt ratio calculation. So we talked about that, about qualifying your income versus your debt. So that's not part of it. The last C is the collateral. So we're going to look at the house, and my eyes in the field are going to be our appraiser, Mark Floyd. He's going to tell me that, hey, this house has a sagging roof. You might want to get that inspected. Or he's going to say, this house is in great shape. The condition is a 5, which is good. There's no issues. Or he's going to say there's a lot of steps in the back and there's no handrail there. Or that might be a safety issue. So he's my eyes in the field, and he will tell me about the house. And if there are issues, a lot of times Mark will call me and say, hey, Joe, I think we have a problem with this house. There's holes in the wall and there's no flooring. Then that could be an issue. And then our closing attorney, Willie Fallon, he will tell us about the liens on the home. So when you're buying a house, Willie will issue you a owner's policy and a lender's policy. We won't make a new loan, and he's going to talk about this, but we won't make a new loan if there's not a lender's policy. The owner's policy is optional, but I highly recommend it. Highly recommend it. And Willie will talk about that a little more as well. If there are title issues, we will address those on the conveyor belt as your loan goes down the conveyor belt. Willie's office will call me and say, hey, Joe, we've got an issue with this purchase. There's a seller that's not on the contract, and whether it's a family member or someone, they will look at that and get that addressed. A lot of times they will contact the listing agent and say, who is this person on the house? And they say, oh, it might be a deceased relative or a deceased spouse or whatever it is, but they will get the paperwork to rectify that. We talked about credit. I don't know, Amanda, am I going long?
No, you're doing good.
I could talk for hours, so I don't know. Hopefully everyone's still awake out there.
Yeah,
I never know because there's no live audience.
We do have some questions if you want to go ahead and answer some questions. So one question we have is, how long is previous short sale or foreclosure seen as derogatory?
They will stay on your credit report for 7 years. With a conventional loan, they've got to be we look at 7 years from when the bank took the property back, not when someone made their last payment, but when the bank actually took the property back. It's 7 years. Now, I know with FHA, it's 4 years, so we may need to look at an FHA loan in that instance.
Okay. The next question we have is that someone is divorced and they still have to settle the house and they are the co-borrower. If I purchase the home by myself, will I be considered a first-time home buyer? Any information or direction about grants for home buyers?
If you're on the title to the property, so if you and your ex-spouse were on title, if he was or she, I don't know which one was, but if one of the owners is on just the loan and not the title, then you would be considered a first-time home buyer if you're not on the title. So that's the dividing line, and the only way to know that is to look at you'd have to look at your documents that you signed initially when you purchased the house, and I'm assuming got a loan on it. So it comes down to ownership and not if you're basically on the loan. Because sometimes, for instance, a husband might be on the loan and the wife and husband are on title, or vice versa. I just have to make sure that the person who is buying, a first-time home buyer, was not on title to the quote-unquote old property. And in terms of grants, there is a program called the Georgia Dream, and that's for someone who has not owned a house, and they will lend up to 100%. They'll do a 97% first and a 3% second. So that's called the Georgia Dream. You can Google that and learn about that. That's actually a pretty good deal. You've got to make under a certain amount of income, depending on what county you're in, to qualify for that. But the loans that we have, you need at least a 3% down payment.
Okay. And the next question is there an issue with getting the down payment from stocks? And follow up to that is, do they need to cash out 2 months prior to buying?
The second part would be no, you can cash out the stocks yesterday and buy the house tomorrow. The only thing we need is a paper trail. So the paper trail would be, here's my TD Ameritrade account for January and February. Here's the transaction where I sold all of my Amazon stock, and now I have $1 gazillion for down payment. So, and hopefully, what I recommend is when you do sell your stock, deposit that money at the credit union. Makes my job a little easier, because then I can see the money going in. I can show my underwriter we have the money available. Here's the 2 months Ameritrade accounts where they've had the money. It's in their name, and that's fine. The other thing I didn't talk about is you can actually get a gift from a family member for the 3% down payment. So that just kind of popped in my head. So let's just hypothetically say that maybe your parents have a TD Ameritrade account. They can gift you the down payment as well. Hopefully that answered.
Okay. And we'll take one more question, and then we'll filter in some more of these further throughout the webinar. But this last question we're going to answer right now. Can you find out how much you qualify for instead of applying for a certain amount?
Yes, and that you can do that with a phone call. So just call me, and you'll have all my contact information at some point at the end of this. But you just call me and say, hey, Joe, I make this amount of money per month, and my expenses are X, Y, and Z. How much of a house can I afford? And I will give you, some kind of range, because part of the calculation is the taxes and insurance. And for taxes and insurance, I don't even know what house you're buying. We're going to just estimate where that is. So I can get pretty close. I mean, a lot of times I'll say you qualify between 200 and 210, maybe 220, depending on this, that, or, what the taxes are. But and again, a lot of times I'm going to tell you that you qualify for a lot more house than what you want to buy, just because these interest rates are so low. So, for instance, I just want to do a quick calculation for all my math people out there. If you're buying a house and you want to finance it for 30 years, I call it what the factor is. So let me just plug that in my handy dandy calculator here. So for each $1,000 that you borrow, the principal and interest payment is $4.21. So if you borrow $100,000, your principal and interest is $421. If you borrow $200,000, your payment's $842. That was the easy one. So $842 is your principal and interest. So you can use that $4.21 as a factor and just plug in your loan amount times 4.21, and that's what your minimum payment is. So you're going to qualify for a lot of home if you want to do it. And then to that number, we would add for your taxes and insurance. The taxes are typically about 1% of the value. That's what the taxes are in our area. Once you have a property, you can go to the county website, plug in the address, and they will tell you what the taxes are. And then the last piece will be the home insurance. Home insurance can range depending on if you want the Picassos on the wall covered for insurance, but typically home insurance is between $100 and $150 a month, typically, or anywhere in between. But at least that gives you some kind of ballpark for where your monthly payment's going to be. And again, you're going to qualify for more home typically than what you're going to want to spend.
Thank you. And then we do have a few more questions, but we'll answer those throughout the presentation. But I'm going to turn this over now to Rebecca Cooper. She is our realtor, our expert realtor for tonight's call. Rebecca? You may need to take yourself off mute.
Okay, good evening. Can y'all hear me okay?
Yes, we can hear you. Thank you.
All right, fantastic. Well, I really appreciate Amanda and Joe and the whole team there at Credit Union of Georgia for inviting me to participate and share some information this evening about the importance of having a realtor to represent you and the home buying process. So just to start out with, as Joe was mentioning, pre-qualification is extremely important when you're looking to purchase a home anytime, but especially in certain market conditions. And we'll talk about that a little bit more in just a few minutes. But very often, home buyers will come to me and say, you know, I've already talked to Joe at the credit union. I've got my pre-qualification. Now I want to start looking at homes, and that's fantastic when I hear that. And sometimes that doesn't always happen. Sometimes somebody will reach out to me first and say, you know, I'm just getting started with the process. I'm not quite sure what to do or where to start. And one of the first things I'm going to say is we need to put you in touch with a lender. We need to get you in touch with Joe at the credit union and get you pre-qualified. And again, I'll talk a little bit more about market conditions in just a little bit and tell you more about why that's so important. But from the standpoint of using a realtor, it is great to have somebody who's on your side to just really watch out for your best interest in the transaction, help you through the whole process, whether you're a first-time home buyer or not, just to have somebody there to represent your best interest in the transaction. Sometimes we're working together for a relatively short period of time. If you find a home, you know, the first day that we go out and we put you under contract, you may close 30 days later, and our whole relationship has, you know, only lasted about 30 or 45 days. But more realistically, with most people, it takes some time to find just the right home. This is a big investment, so we don't want to rush into it. We want to make sure we're finding you the right home in the right neighborhood that's the right fit for you and your family. So you and your realtor are going to work closely together, oftentimes for you know, a month, 3 months, 6 months, 9 months, even longer. So you certainly want to be working with somebody who you like spending time with, and obviously somebody who you trust, because this is somebody who is, you know, going to get to know you, get some personal information, get to know you personally, and you're going to be providing some personal information too. So you definitely want somebody you trust and somebody who you feel is going to be knowledgeable to really help you throughout the process. As far as how you're going to find your realtor, obviously a lot of people find their realtor from a referral from somebody else. A trusted family or friend is often how people are going to, if they don't already know somebody who's a realtor, you know, ask and say, who do you know? Who did you use when you purchased your home or sold your home? Sometimes people will just be online searching for a home, and they find something that they like, and they call the realtor that's listed on the website, or they're driving around and they call the realtor that's on the site. That's not a problem to do that, but what a lot of buyers don't realize is that realtor already has a written agreement and an obligation and a fiduciary responsibility to represent the seller in that transaction and not the buyer. So you at that point may be trying to work with somebody or negotiate the purchase of a property with somebody who actually does not have your best interest in mind, because they already have a fiduciary responsibility to represent that seller and to work with the seller. So just be careful with that. The other thing, and this happens all the time because people just don't realize it, but if you walk into a new home subdivision and you're looking at the model home and you don't bring your realtor with you to represent you, and you start working with that agent who is on site in that subdivision, those are wonderful people. I used to be one of those people. I was on site in new home sales for about 8 years. They're very knowledgeable. They're very friendly. They provide you with a lot of great information, but they represent the builder in the transaction. They have to watch out for the builder's best interest, not your best interest as the buyer. So it's always a good idea to start the process with a realtor on your side who's going to represent your best interests in the transaction. A lot of times people are concerned about hiring, so to speak, a realtor to represent them because they're afraid it's going to cost them commission. And what I always like to do in the beginning when I first have a conversation with a buyer is kind of, you know, clear the field and let them know that most of the time the seller is going to pay the real estate commission, both sides of the real estate commission. So a buyer can take advantage of having representation typically without having to pay for it, because there is already a written agreement between the seller and their listing agent. And in that written agreement, it says the total amount of commission that seller is going to pay. And it is written in there that seller is going to split that commission with the buyer's representative, with the buyer's agent. So you as a buyer, take advantage of having a realtor represent you in your best interest in the transaction. And most of the time, you're not going to have to pay for it. Okay, so now we're going to go on to the buying process. So like I said, the first thing that we're going to do, if you come to me and you haven't already been pre-qualified, is I'm going to say, hey, we need to contact Joe at the credit union. We need to get you pre-qualified. I'm probably having this conversation with you either over the phone or in an email. And then the next thing that we will do is I always like to have what I call an initial buyer consultation meeting with all of my new clients. I used to do these back in the good old days before COVID. I used to do these in person. We'd go to Starbucks or Chick-fil-A and sit down and have a cup of coffee for, you know, an hour or so, and get to know each other. Now, you know, in the life of COVID here, I do these typically as a Zoom meeting. But this, again, is a chance to give us that opportunity to get to know each other, help me understand what it is you're looking for specifically in a home, the area, the neighborhood, the subdivision, you know, give me all that detailed information to help me really understand what it is that you're looking for, so I can really help narrow down that search and find just the right home for you. In that meeting, we also talk about the whole buying process. So really a lot of what we're going over tonight, we're going to go over in that meeting. We talk about market conditions because, again, even if you've bought and sold homes before, if you haven't done it recently, you could be in a very different type of market than the last time you bought or sold your home. So it's really important to understand what type of market you're in. And then we go over the different documents that you're going to see throughout the process. So all of that typically takes about an hour or so, depending upon how many questions you have. And then once I've got that information from you from that meeting, we go ahead and set you up on a home search. So at that point, I'm going to type all this information that you've given me into the computer, and you're going to start getting emails from me with a link to homes that match the criteria that you've given me. And as you're looking through those emails, eventually you're going to see something that you say, oh, this looks great. We want to go in person. So then you call me, email me, text me, we get together, we set up a time, and we actually go visit the home. Again, some people, the first home they see is the one that they buy. It's like, ladies, when you find the right wedding dress, you know it's the right wedding dress. And you know it. And if you're anything like me, it was the very first one I saw, and I had to go see 10 other wedding dresses because I couldn't believe I was going to buy the very first one that I saw, but I kept comparing everything to that dress, and then I ended up going back and I bought the very first dress that I saw off of the rack. So that does sometimes happen. Honestly, that is not the norm. Most of the time it takes, several trips out to look at homes. And like I said, sometimes, some people within, a week or so can find the home, but sometimes it takes 3, 6, 9, 12 months or more to find the exact right home for you. But when you do, let me know, or let your realtor know, hey, this is the house we want to make an offer on, and we think this is the right house for us. So at that point, your realtor will prepare the offer in writing with you, and there's quite a few different terms that you will negotiate when you make the offer. The big one that people always think of, obviously, is the price. What do we want to offer in price? But there's other things besides just price that go into the negotiation. Do you want to ask the seller to contribute towards your closing costs? What closing date do you want? How many days due diligence are we going to ask for? How long are the other contingency periods going to be? How much earnest money are we going to put down? So all of those are things that you'll talk through with your realtor at the time that you're making an offer. The offer will then be presented, and then you will negotiate back and forth and hopefully reach an agreement with the seller, and you'll be under contract. So once you're under contract, then the next several days, depending upon how long you negotiated, is going to be what's called your due diligence period. In Georgia, there is a due diligence period in the contract in most situations, if we've negotiated one, which hopefully we have for you. And that's the time that you're going to do your inspections. You're going to hire your home inspector. You're going to check out the neighborhood again, just to make sure that there's nothing about this property or the area that is going to make you decide, wait a minute, I'm not sure, I see a red flag, maybe this isn't the right home for me. I also recommend that you reach out to your insurance agent during that due diligence period, if you can, to get a quote on homeowners insurance, because they will let you know if the property is in a floodplain and if it's going to require flood insurance. They need to actually do a quote for you, so they need an address to be able to determine that and run that quote. But if it is in a floodplain, they can let you know that and let you know how much that flood insurance might be. And sometimes that can be really costly, and that may potentially be a reason you may want to back out of that contract if you find out it does require flood insurance. Not always, but sometimes. But if you do back out of your contract during due diligence, just understand you get your earnest money back, and it doesn't cost you anything. But hopefully everything's going to be fine. The inspection's going to be good. We're going to negotiate through. Maybe we ask the seller to make some repairs to the property, and then we go through another round of negotiations at that point. Once we come to agreement on that, then you're going to prepare for closing. So at that point, you're just going to keep in close contact with the lender, provide any information that they have asked you for. If they need any more information, provide requested information to the closing attorney, whatever it is that they need. You'll be setting up your utilities. You'll be wiring funds to the closing attorney within a day or so of closing. And then you'll actually go and have your closing, which is where you sign the paperwork and you get your keys. So that's the process. one of the things I get a lot of questions on is, when do I start writing checks? When do I have to start spending money? So I know Joe indicated that, you know, most of the money he's going to collect from you is going to be at the closing, which is absolutely true. There's some things that you will end up having to pay for ahead of closing. The first check I always tell people that you're going to be writing, that's your earnest money. So typically your earnest money is going to be about 1% of your purchase price. So if you're buying a $250,000 house, we usually start with about $2,500 earnest money. Now, that's not a hard and fast rule. That is a negotiable item, but that's kind of a good point of reference to start with. During that due diligence, I mentioned you're going to want to have your home inspected. You're going to have to pay for that home inspection at the time that you have it done. So you will be writing, that's the second check that you're going to write. So after you negotiate your contract and put your earnest money down, you're going to have your home inspection. You're going to pay for your home inspection at that time. At that point, everything looks good. We're going to move along in the process. You're going to get back to Joe and say, yep, we're going to go forward. Go ahead and order the appraisal on the property. And at that point, he's going to collect the appraisal fee from you. Then everything else is going to be due at closing. So your cash to close is going to consist of your down payment, your closing costs, and prepaids. And that's all a figure that Joe will help you arrive at and help you understand how much money that's going to be that you're going to pay at closing. So I just want to share with y'all a little bit about the current market conditions, because I have alluded to that and it does affect how you're going to negotiate on properties. So these are just some really quick stats for Cobb County, Cherokee, Paulding County as a whole. So if we're looking at each of those counties, the first chart that you're looking at is the number of homes that are for sale. And we've got a 6-year history here, just so you can kind of see what's happened over the course of the last 6 years. And we're only looking at January as a month. So we're just comparing January of 16 to January of 17 to 18, all the way through January of this year, because that's the most recent data that we have right now. So you can see we were kind of rocking and rolling 16, 17, 18, 19, 20. There weren't huge changes in the number of homes that were for sale. And then all of a sudden, January 2021, all of a sudden you can see a drastic drop in the number of homes for sale in all 3 of our counties. So for example, Cobb dropped 53% from January of 2020 to January of 2021. As of January of 2021 in Cobb County, in total, every price point, there were only 991 homes for sale. Same thing in Cherokee. There was a 53% drop from January of 20 to January of 21. And in Paulding, a 56% drop from January of 20 to January of 21. So you've probably heard inventory is way down. This is just statistical data to back up inventory is way, way down. So going to the second chart, not surprising, because our inventory is low, our days on market are also low. So again, we're kind of rocking and rolling from 16 until 20. And then all of a sudden, our days on market in Cobb County and Cherokee County, both in January of this year, the median number of days on market was only 9 days on the market. And in Paulding, only 6 days on market, between 71 and 83% decrease from just a year ago. Then finally, if it's probably not too surprising, because inventory is so low and our days on market are so low, that's what's really driving the prices up. So you can see in that last chart, the median sales price is obviously going up across all 3 counties as well. In Cobb, just from last year, median sales price went up 17%, Cherokee went up 19%, and Paulding went up 18%. So we have to make creative offers in a market like this, and that certainly can be done, but that's another reason it's so important to have somebody on your side representing you throughout the transaction, because the days of making offers, you know, oftentimes lower than sales price, and you know, asking for a lot of things may not work in this type of market. So it's important to understand the market that you're in, and you know, have somebody who can help you through that and really negotiate an offer for you that is hopefully going to be accepted, because that's you know, at the end of the day, what you're trying to do. So we do have to get creative. And like I said, that's why it's so important to have that pre-approval letter, have that pre-qualification letter before you even go out, because you may on day one find a house and want to write an offer. And we've got to have that to substantiate, to show Mr. and Mrs. Seller, you know, these people are solid financially, they're ready to go. And hopefully put you in a better bargaining position to where that seller wants to accept your offer as opposed to somebody else's offer. And then lastly, again, just things are a little bit different buying now and looking at homes now than in past years, thanks once again to COVID. So we, like I mentioned with our buyer consultation meetings, I have been doing those more on phone or virtual rather than in person. When we're seeing homes, we do still go see homes in person, but you know, most sellers are going to require people to wear a mask, gloves, shoe covers, use hand sanitizer, things like that when viewing their home. We do see more virtual tours, virtual open houses, things like that, as opposed to actually going to an open house and walking through in person. I've even done duo or Skype showings with clients if, you know, they're particularly high risk and are just very uncomfortable with going out in person. We can do showings, like virtual showings as well. And then on the day of closing, all of the closing attorneys are doing, you know, offering different things, such as, you know, socially distancing, having the buyer or the seller maybe in a different rooms from each other, or going at a slightly different time to sign. I'm going to let our expert closing attorneys speak to that a little bit more about how the closing attorneys are handling the closings during COVID. But that's the information that I brought to share. And again, I'm happy to answer questions at the end if anybody has any questions and would like to put those in the chat. So thank you so much for your time.
Thank you so much, Rebecca. That was great information. We are going to move on into the home appraisal, and we have Mark Floyd that is going to be going over home appraisals with us quickly. Mark, are you on the line? You may need to take your phone off mute.
If we can't get Mark, then I'll go through this quickly, and then maybe we'll get his phone fixed.
Okay, yeah, we'll go ahead and turn this over to Joe, and he can cover the home appraisal process. And if Mark, if you get your phone working, just maybe type us something in the chat or just speak up.
Okay. I talked earlier about the home appraisal. The home appraisal, it gives, like I said, that's our eyes out in the field that shows us what you're buying. We only know, you know, the address of the property, and maybe looking on Zillow or a place like okay, Mark is texting right now. So Mark, what I'll do is I'll just finish up, and if you want to answer some questions at the end, we can do that. But the home appraisal will just show us what your house is, what the marketability of your house is, and what kind of value it is. It comes in at, Mark will take 3 comparables like the house that you're buying, see what they've sold for, and hopefully the sales are within the past 6 months. And he will put together a detailed report and submit that to us. And once we receive your appraisal, we forward it to you for your records. We do not give the appraisal to anyone except their member. What you do with the appraisal at that point is totally up to you. But like I say, the one thing that Mark's going to look at is the condition of the home, the number of rooms, the square footage, how many rooms are above grade and below grade, is there a finished basement, or is there a bonus room, all of that good stuff. He'll take pictures of everything. If he sees any deficiencies, he typically calls me, or he will let me know, hey, this place doesn't have it's got a hole in the wall, or there's no flooring. So he will let me know that. But what I want to do is save any questions that you might have on the appraisal till the end, and we'll get Mark's phone fixed. But the next section is going to be our home inspections. So Amanda, who do we have lined up for that?
We have Tim Reed for home inspection. So Tim, I will turn it over to you. You may need to take your phone off mute as well.
Let me see if I can get a hold of Tim. Technology is great when it works.
I know. We can go ahead and take a few questions while we're waiting for Tim to get on the line. If you are a first-time home buyer but make a decent income, can you still pay just 3%, or is that just for low-income applicants?
The good news is that the secondary market, which is Fannie and Freddie, that's where a lot of these loans end up, they do have a program where you can put as little as the 3% down with no income restrictions. The interest rate might be a tiny bit higher and the mortgage insurance might be a tiny bit higher, but you can do a loan so your income doesn't matter. So you can have higher income and still qualify for a 3% down.
Okay. So the next question is to follow up on the short sale and foreclosure, the derogatory history on your credit report. So in 4 years after a short sale, can you apply for an FHA loan?
Yes, the answer is yes. And the 4 years starts from when the home went back to the bank. So we'd have to look at the deed that was filed at the courthouse, and whatever date that says, that's when the 4 years starts.
Okay. Can you explain the process for construction loans?
Yes, construction loans are a little different. It's a loan between yourself, the builder, and the institution that's doing the construction loan. We currently do not offer construction loans. They're very labor intensive, and it's just a lot of paperwork. So what will happen is that the bank will set up a draw system. So it's typically 5 draws. And let's say hypothetically it's $100,000. So on the first draw, the credit union or the bank institution will disperse $20,000 to buy the land, grade it, and do that, all that information, all that good stuff. And then we will send an inspector or an appraiser out that says, yep, it looks like they cleared the land. So then the builder will request another draw. So we'll issue another $20,000. So it's 5 equal draws. And as the home is being built, we're constantly updating the title, updating the value of the property, making sure that the house is actually being built and the builder doesn't run off to Mexico with all the money. So we like to make sure that they are doing what they're supposed to do. So there's a lot of going back and forth during the construction process. Typically it works out well as long as you have a good builder. It's a good way to do it. With the cost of homes right now, new construction, I was at Home Depot the other day and I bought a piece of plywood and it was $50. So just for a piece of plywood, I think it was sanded plywood. But anyway, it's expensive. I mean, all the building materials are very expensive right now. And I don't know when that's going to change, but I would really consider looking at existing homes versus new construction. But, everyone has their wish list of what they want to do. Construction loans, they do take time, and it's a very labor-intensive loan. And just always plan on cost overruns. If you think the house is going to cost $300,000, let's say, I would also put in another 10%. So by the time you're done, it might be $330,000. So just have that in the back of your mind that the fixtures that the builder wants to put in are of lower quality, and you might want different fixtures. So it's going to add. So those things, the more that happens, the more you make changes to the design and whatever you're doing on the new home, it just adds to the price. So just kind of FYI on that.
Okay. Tim, are you on the line? Okay, we'll answer a few more questions. Do Do things like Amazon Prime payment or club membership, are those included in the possible loan payment calculation?
No, the Amazon Prime account is not calculated in your debt ratio unless it's a Visa or a MasterCard that shows up on your credit report. That does not get counted.
Okay. And then how long can you look before your approval is considered sale?
So typically what I do is on the approval letter that I put together for you, I make the expiration about 4 months out. Typically that's enough time to find a house. If my commitment letter expires, just call me and say, hey, Joe, this is so-and-so. You did my commitment letter. I need a couple more months on it. We haven't found a house. Yeah, that's fine. Click, click, click. I send you a new letter. It's not a problem. As long as, I call status quo, as long as the status quo doesn't change, as long as you're still making the same income, as long as you don't have any, you haven't bought a Lamborghini anytime soon and have a $2,000 car payment, as long as none of that stuff changes, you're good. As the approval's good as long as you're good. And we can talk about that when we update your letter. That's not a problem at all.
Okay. And then one last question: is the earnest money considered as part of the down payment? Yes.
Yes. So in our example of if you're putting 3% down, and the 3% happens to be, I don't know, $10,000, let's just say, and you put $2,000 down, so then in my example you would only need $8,000 for closing. So the 10 that's required minus the 2 that you already put down leaves 8 more to go. So yes, that is part of the down payment.
Okay, thank you. So Tim, are you on the call? What we're going to do is we're going to move, I think Willie Phelan with Sherman and Phelan is on the call. So we will go ahead and, Willie, are you ready to present?
Yes, I'm here. This is Willie.
Thank you. Okay, I will switch over to your slides. And so Willie is a real estate closing attorney. So he is going to go through the closing process with you.
All right. Hi, everybody. I'm Willie Phelan. I'm an attorney with Sherman and Phelan here in Marietta. And we've been working with Joe for a real long time in the credit union for several years now. And we handle closings all over the state, but most of our business is here in Metro Atlanta. I'm going to tell you a little bit about what closing attorneys do in this whole process and where we fit in. So we get started about the same time that you sign the contract. So once you agree on a price, find a home, agree on a price, sign a contract, then you send a copy of that to Joe to start the loan process, and a copy to us, and that starts us on the title process. And that's the first thing on our slide that you see that we do if we perform a title search. Other things that we do is we conduct the closing, which is the actual ceremony. We disperse funds, so we make sure everybody gets paid or paid off. We issue title insurance, and we'll discuss what that is in a second. And then we record any deeds or other necessary documents with the clerk. Yeah, let's see. And Amanda, I don't know, do you move it or do I move it? There we go. So title search. So once we get the contract and the title order from Joe, we'll go ahead and start a search. And there's really a couple of main goals here. One is to actually confirm who owns the property, and the other is to identify anything that needs to be paid off, whether it's loans on the property or judgment liens or taxes or what have you. So you'd be surprised at how many times somebody who signs the contract doesn't own the property, or there's people that own the property that haven't signed the contract. So we make sure that the people who are entitled to the property are also your sellers. We help sellers work through any issues that they may have with title. So if there's any deceased folks that still have an interest in the property, we help figure out how to get the interest out of their estate, and so that they can then sell the house. All the information that we collect is from public records. So the tax information is all kept by the tax commissioners, and the Superior Court clerks of each county collect and are responsible for the deed records. So we've searched those records as well. Like I said earlier, we confirm the taxes on the property. A couple reasons for that. One is to make sure that they're paid. If they're not paid, they are a lien. And two, to help Joe calculate escrows. So if someone's going to escrow for taxes and insurance, Joe obviously needs to know how much those taxes are, and that's what our tax search will show him. I don't know if we talked about escrows or not earlier. I don't know if Joe touched on that, but if you're going to escrow for taxes and insurance, what happens is that the credit union will hold 1/12 of the yearly premium and tax amount aside. So each month when you make a payment, 1/12 of the taxes and insurance gets set aside into an escrow account, and then they pay that on your behalf when those amounts come due. Some people really like the convenience of it, and some people like to handle that on their own, but we see it more times than not. Another thing that we do is confirm payoff amounts. Usually it's for mortgages. So if the seller had a first mortgage and sometimes a HELOC or a second mortgage, we'll work with them to get the correct payoff from their lenders so that those will get satisfied at closing. We also help get payoffs on other liens. A lot of times we'll see judgment liens. So if somebody has a lawsuit against them and that's reduced to a judgment, a dollar amount, we'll work to get that payment made. Same thing with tax liens, federal tax liens, materialman's liens, or other kinds of liens that are on the property. And we do this so that we can clear any title issues, so we can issue title insurance. And I think the next slide may talk about title insurance. Nope, getting closer. So we conduct the closing. Oh, there's title insurance. So there's two kinds of title insurance. So there's lender's title insurance and there's owner's title insurance. So the lender's title insurance protects the lender from any defects in title, and the owner's title insurance protects you as the new owner. So a defect in title can be something as simple as, and we see this quite often actually, a old security deed that for a loan that may have been paid, but the previous lender never issued or recorded a cancellation of record. So if you do a title search, it looks like that loan is still open and good, where in reality it's been paid off. So if there's an issue like that, title insurance will help close over those issues, or if it becomes more serious, they'll pay the claim or represent you in court. Other things we may see as a title issue would be incorrect legal descriptions. It could be forgeries, so somebody could forge a name on a deed. Any number of different things like this. And that's what title insurance helps protect you against. And if you buy an owner's policy at the same time that you get a lender's policy, you do get a discount. So it's good to buy them at the same time. And I think we can go back to conduct the closing. So the big thing that we do, and typically, unless there's any issues with the file, the only time you really see us is when we conduct the closing. You'll probably hear some folks talk about how long it took to do the closing and how hard it was. In reality, it takes anywhere from 30 minutes to an hour, depending on how many questions there are. And it's not that bad. The credit union has some really nice packages. They're not that long. Doesn't take that long to go through it. So your time in the closing room is really limited, which is good in the time of COVID. And in the last year, we've tried to do a lot of different things and be very flexible. We still see people in the office quite regularly for closings. We also go out of the office to do closings. We go to people's homes sometimes. We go to credit union branches. I was actually at credit union branch Town Lake today doing a closing. If we're doing it in the office or even away, everybody's always masked. And then we clean our conference rooms in between. If people are concerned, we're happy to schedule kind of a staggered closing where sellers and buyers meet at different times to limit the amount of folks in the room. Right now, probably only about half of our real estate agents come to closings, and we don't really see that many loan officers, just to kind of keep the people or the number of people in a closing room down to limit the amount of contact we may have. So a couple of things that happens when we do the closing. So we as closing attorneys prepare certain title documents, like the deed and certain other documents that have to do with title insurance, where the credit union is going to provide all the loan documents. So we make sure that those are all collected and correct at closing. We work with the agents, if there's agents, and we work with the parties to schedule a time and a place that's convenient for everybody to close. And then we sit down and sign everything. After the closing, we're responsible for dispersing all the funds. So we'll wire out the payoffs to any lien holders, including old banks or credit unions that may have a loan on the property. We'll send the seller their funds. Sometimes the buyer actually gets some money back if they send us too much. We issue title insurance policies to the lender and to the new owners, and we also record the new deed into the owners and also the security deed, which gives a security interest to the credit union. And move to the next. So as I was saying, we file the deeds. So deeds to real property are all recorded in the Superior Court Clerk's office of the county where the property is located. There's 159 counties in Georgia, and they all have a clerk of Superior Court. So that's where all the deeds reside. They are all scanned, and you can actually view them online. Georgia has a really good platform that goes all the way back in most every county to 1993, and in some counties go back much further than that. So you can look at deeds
How many have to call me?
over almost the last 30 years. And once here's something that's important too. Once we record the deed and get it back from recording,
Okay. Sorry, I missed your call. Okay, thank you. Bye.
So after closing, you will probably get some junk mail that will ask you to pay $75 for a certified copy of your deed. Well, you don't need to do that because we're going to send you the original for free. So open your mail and make sure it's not a servicing transfer. And a lot of it's going to be junk mail that you can just throw away. And next slide.
I think that was the last slide.
Oh, that was the last one? Okay.
Yeah, I think you're good.
Yeah.
So, thank you.
I was just going to say a couple of home buying tips. Like Rebecca was saying earlier, if you're new to home buying, or even if you're not, buying houses right now is very tricky. I strongly suggest you use a real estate agent, especially if this is something that you're not well versed in. It's probably harder now to buy and sell real estate than it's ever been, not only with state and federal laws, but also just with a very, very fast-moving market. That being said, we do a lot of for sale by owner transactions. Typically, those are between family members, or if you're renting a house from someone and you want to purchase that from your landlord, we can help with those if there's no agents involved, prepare a contract, and kind of walk you through the process. Those are called FSBOs, or for sale by owner transactions. And we actually see a fair number of those. We probably do anywhere from 5 to 8 a month. So we see a lot of people buying things from family members, or like I said before, from landlords. I think that's really all I had. I didn't know if there's any questions, and I'll stay on the line in case there's any questions later too for me. But thank you very much.
Thank you, Willie. We really appreciate it. We don't have any questions right now for you, but yeah, if you can stay on until the end, that would be great.
Sure.
I think Tim got everything repaired. So Tim Reed with Loans Pro, are you on the line? You may be muted. I'm not sure. Okay, we're going to call him in and just speakerphone him in on the call right now.
I can hear you, Tim.
Okay.
Here we go. You're live.
Okay.
Okay, guys. Sorry about this technological difficulty on my end here. I've been hearing everything that's been going on. Just haven't been able to hear me. I'm Tim Reed. My name's Tim Reed. I'm with Loans Pro Home Inspections in the Atlanta area here. We do home inspections all over the Atlanta area, pretty much all over North Georgia, Middle Georgia, all the way from the South Carolina to Alabama state lines. So anyway, that's a little bit about who we are. We do a complete home inspection. Every home inspection has a drone service where we check the roofs. We have an infrared where we're going to scan your walls to see if we see any issues behind the walls or any temperature anomalies that would indicate broken pipes, water issues, those sort of things. We're pretty much going to be very invasive when we come into the house and to test everything and to find any problem that we can find in the structure for you. The purpose of the home inspection is for you guys to get a clear picture as to what it is you're buying, okay? The home inspection is going to cover everything that's wrong in the house, from the loose doorknobs to the strike plates that aren't lining up to windows that are sticking, that sort of things. The main things that you're wanting from that home inspection are we call the 3 S's, and that's going to be safety, systems, and structure. Those are the type things that you're going to go back to your real estate agent and you're going to negotiate on to make sure that you're purchasing a home that's going to be safe. And it's not going to have any costly repairs for you when you move into the home or shortly thereafter. It's very important to choose a good home inspection company, whether it's ours or another one. Make sure you're choosing a good home inspection company that's been in business, that has inspectors that are ASHI certified. That's very important. ASHI is the gold standard for certifications for home inspectors, and it's recognized in all 50 states. Unfortunately, in our state of Georgia here, home inspectors are not required to be licensed. And that's not a good thing for you guys, because you could have a home inspector who is, good guy, knows a little bit about construction and just hung a shingle out there, put a sign on his truck, and now he's a home inspector. So checking out your company that you're using is very, very important, and making sure you're using a good company with good reviews. It will go a long way to help you in this process. Now, the way William and Rebecca had explained that this market right now is very difficult. So the sooner you can get your inspector lined up and get the property looked at through your due diligence time frame, the better off you're going to be. Now, a lot of these steps that they've gone over with you is going to help you to be in the right place at the right time in these situations, because it is a very fast-moving market, like William said, and difficult to keep up with here in the Atlanta area, and it's been this way now for quite some time. So it doesn't always going to change much. As far as the home inspection, when we go into the home, we're looking for, like I said, structural concerns. We're looking for current problems, past problems, indications of problems that are going to come about in the future, such as soggy yards, drainage issues, things such as that. Decks, very important to have those looked at from a qualified standpoint, because everything has a lifespan. Your average deck, is going to run you about, anywhere from 10 to 30 years, depending on how well it's built and what type of construction was used. The photos you're looking at there are a number of different things that we see on home inspections. The first photo you're looking at there with the center blocks is a very bad job of putting a pier under the support of a floor system in a house. Now, when we go into crawl spaces, we see all kind of crazy things. I'll be real honest with you. And sometimes more things that the average person wants to have to go down there and deal with. But when we do these inspections, we're down there looking for things that other people are not going to see. When you go look at a house, you're looking at it from the motion standpoint. You're going to see where you're going to move your furniture, where things are going to fit. You're not necessarily looking at foundational issues, structural issues, those sort of things. And that's why you hire a home inspector. If you notice, the second photo there is 2 different types of shingles on a roof. When we do our roof inspections, we send a drone up. And with the technology we have nowadays, it's pretty much very difficult to hide anything from us, because with the infrared cameras, we can basically see through your walls. With the drone, we can see from everything from above. We can look down your chimney from above with the drones and take pictures of that as well. So, again, going back to using a good home inspection company, you want to make sure that you have all of those things in your arsenal to help protect you on your purchase. Now, if you look at that third photo, that's a leaning chimney. Now, that can become very expensive. I've had a couple of chimney issues in the not so distant past where there was as much as $25,000 to $30,000 on one home to have it repaired, and this is just for the chimney repair. Okay, so again, these type of things being identified during the negotiation period when you have that due diligence time frame is the most important thing you can do to protect yourself from any type of expensive money pit type issues when you move into a structure. Most of your home inspections are going to run in the neighborhood of $400 to $500, depending on the size of the house, the square footage. Do you have any additional structures? Is there a swimming pool? Those sort of things will all raise the cost. But your basic home inspection runs between $400 and $500. Now, we have other things that we do on home inspections as well that I want to point out to you. One is radon. You're going to hear a lot about this as you start to buy a home in Georgia. Radon is an odorless, colorless gas that emits from the Earth's crust when uranium decays. And I'm not going to bore you with all the crazy details, but this is one of those things you want to be aware of when you're purchasing a home. Again, having a good inspection company will counsel you on this. Will tell you, what the issues are with radon, why you should be concerned about it. Again, mold issues is something else that you would want to be aware of. Not every house needs a mold test. But if during the course of the home inspection we find issues that would indicate that there could be a mold problem, we'll counsel you on that as well and give you the option to do that. Now, those are both additional costs to the home inspection. And, if you, depending on the size of the home, if there's something you needed to do, we would, give you that information. The last thing I wanted to talk about was like I said, the companies that you hire to do this. It's very important that you choose a good company that's been in business in Atlanta for a while, that has actually certified inspectors, that brings all of these things to bear. Because back when I started doing this, 10 years ago, it was a little different ballgame, and I look back at it now and I wonder how I did my job with all the bells and whistles and tools I got nowadays. I don't know how we did what we did 10 years ago, but the point that I'm trying to make is that doing a home inspection, please do not gloss over that part in the process. Too many people think that they have an Uncle Bubba or, Uncle Joe that knows everything about the house. But we come in from a non-emotional standpoint with a process that is going to allow us to uncover the problems, either problems from the past or problems that they've got now. We see these things every day, and we every day see problems that can be very expensive. We also see problems that are not expensive, but they need to be explained. A lot of times there's misconceptions about minor wall cracks and things such as that. So again, those are the things that a good home inspector is going to bring to the party for you. And the other thing that we do is we help you after the fact. So after you get your home inspection report and you have a tight due diligence time frame and you need to know, hey, what's it going to cost to get some of these repairs done, we can help counsel you through that process. Or if we can't give you those exact costs, we can definitely point you in the right direction. So the counseling of what we do takes place on site and after we do the home inspection as well. So please keep those things in mind when you're looking for a good home inspector. They will give you our company's information. I'm sure at the end of this, you'll know who we are. And if you have any questions about anything such as this at all or any type of home inspections, you'll have my phone number also. Please feel free to give me a call or give the company a call. We'll be able to help you out. If you have any questions at all, please chat those in. I'll be glad to answer any questions that you have.
Thank you so much, Tim. We really appreciate it, and we apologize for all the issues we had getting you on. We are going to transition back to the end of the presentation, and Joe's going to cover some last-minute home buying tips. And then again, if you have any questions, just put those in the chat feature. All of our panelists are still on the call, so we could definitely reach out to all of them. But let me get to the end, and I will let Joe take it over.
Yeah, I know we talked a little bit about this. The one thing I forgot to mention is the second bullet point. The credit union is exempt from a particular closing cost called the state intangible tax. And that's a tax that the state charges at a rate of $3 per thousand that you borrow. So if you borrow, I don't know, $200,000, the intangible tax would be $600. Since the credit union is exempt, that means that you are exempt from paying that. So it is a nice benefit of using your credit union. Excuse me. Not only do you get a great interest rate, but our closing costs are typically less than anyone else out there. So, and at no cost, I can prepare a spreadsheet that shows you what the fees are associated with the credit union. We use Phelan, Sherman and Phelan as our closing attorneys. They also offer discounts to our members. So it's definitely a big positive when you're doing the home buying process to use your credit union and the people that we have around us. Hopefully you could hear the knowledge and experience that they have. We will, quote unquote, hold your hand through the process. So that's what we do. And I always tell our members, I don't do car loans, I don't do credit cards or equity loans. I just do the first mortgages, and that takes up, it's a lot of time and a lot of communication. And that's, to me, I think that's the most important part of this whole process, is staying in communication as we go, as I said, down the conveyor belt to make sure that you are in a house that you're happy with. The last thing that we want is for you to be unhappy and own a new house. I mean, it should be a fun experience for those who have not bought a house. It should be enjoyable because, at the end of the rainbow, you get a nice house that hopefully you're happy with. But what I'd like to do now is just open it up to questions that anyone might have. And you can type those in the chat box. I know Tim Reed, our home inspector, is still on the phone, and I think Rebecca is there as well. So, Amanda, let me know when you have any questions that come in.
Do you want to go over these?
Yeah, I can go over a few more. Yeah, we can do that.
Yeah, we don't have any more questions right now.
Okay, let's see. So the next slide, we have real estate owned purchases. The good thing about the economy that we're in right now, we don't have a lot of REO or real estate owned, so there's not a lot of foreclosures that are out there. At one point there were, and it was a good idea to buy a house that was in foreclosure, and then typically those homes are sold as is, and the lender will not repair the home. So just be careful, get a hold of Tim, make sure you're not buying someone else's problems. But typically a foreclosure can be something where you can hopefully fix it up and live in it and have a good investment, so over time it appreciates. And like Rebecca was saying, that the houses in our area are appreciating so high. I think what happens is if you're having difficulties making your house payment, you just sell the house, and it sells literally over a weekend. So that's why the foreclosures are not out there. I don't know of any that are out there. The best person to look for something like that would be Rebecca. She could look and see if there are any foreclosures available, because the first thing that the credit union would do if we ever had a foreclosure would be to call Rebecca and say, hey, Rebecca, we need to sell this house, and then she would do that for us. What's the next one? Okay, so there we talked about the foreclosure as is. Short sale, and again, we don't see a lot of these either, but a short sale is when someone agrees to give the house back to the bank, and then with a quit claim deed, and then the bank will sell it to someone else at typically a lower price. And a lot of times you have to be careful, because if you're in a short sale, whatever the difference is, I don't want to give tax information, but a lot of times they show that as additional income. So if you sold the house for less than what it was worth, that I think the IRS shows that as a gain on sale, but that's for your tax person, not me. But just be careful on a short sale. And I would say if you can find a lending institution that has a short sale, it's another good way to buy a piece of property. Again, make sure you get the house inspected. It's not a requirement, and For the life of me, I don't know why, but I always tell our members it's the best $300, $400, $500 that you're going to spend, because you don't want to buy someone else's problems. It could cost you a lot.
And our last slide is just all the contact information for the panelists that spoke today. So again, we will send this out via email, so you'll have all of this information probably by tomorrow. And so you can definitely reach out to all of them. As you can tell, as Joe said, they are all experts in their field, and they're all trusted advisors for the Credit Union of Georgia. So we definitely trust them with our members. And it doesn't look like we have any more questions tonight. But again, if you do have any questions, the email that you received, you can respond back to that, and then we'll make sure that the question is answered by, whatever area of the mortgage process you need help understanding a little bit better, and we'll make sure that those questions are answered quickly. But again, thank you so much for attending tonight. We truly appreciate it. We value your membership so much, and we're in this process with y'all. So Joe is wonderful. I've gotten several mortgages with him, and he's really walked me through the process the entire way. So we definitely, are your trusted advisor in this. But again, we will send this out to you tomorrow via email. We'll send you the recorded presentation. And again, hope you all have a great night. Thank you.